Hello and welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, a good afternoon coming in for the markets. Today we had opened up on the positive note and now we have just picked up in terms of the momentum there. As of now, the Nifty is trading near the day's highest point. Look at it, 24,650, around that mark is what the Nifty is trading at, up 0.6% in today's trading session. Even the broader end of the markets, that's performing in tandem with the benchmark indices. Let's look at Nifty Bank, because that was a bit under pressure. Now, where's the Nifty Bank moving? That has also seen a recovery from the day's lowest point. That is also up 3/10 to 4/10% in today's trading session. And clearly, that advance decline ratio today is in the favor of advances versus declines. That's what we're seeing coming in. Now, for NSE, the number of stocks on the advance side are around 1,600 stocks are advancing versus 1,082 stocks that are declining. A lot of movers in the last 1 hour that we've seen coming in, whether EIH, Motherson Sumi, Godfrey Phillips, these have gained in the last hour specifically. So that's 1 o'clock, post 1, we've seen these run up in trade. Avanti Feeds, that's reported its numbers as well. We have net profits that's up by 39%. EBITDA seeing a good performance as well. So operationally also seems like a good performance coming in from the company. 2% uptick right now is what we're seeing coming in for the stock. We did see a spike up and then that fall is again coming in for the stock, but still holding on to gains of 2%. So not bad for Avanti Feeds, given that they do have that exposure that comes into the US market as well. So more clarity in terms of tariffs is something that they will also be watching out for, but numbers seem to be good as of now. Revenues, 7% growth there. But this is a show where we solve all your stock-related queries, and we'll be doing just that with our experts for today. We have Astha Jain, Research Analyst at Securities, as well as Somil Mehta, Head of Alternate Research, Capital Market Strategy at Mirae Asset Sharekhan, to answer all the stock-related queries. Astha as well as Somil, good afternoon. Thank you so much for giving us your time as always. Let's start with the first query for today. We have S. Jaykumar, who's writing to us from Tamil Nadu. He's holding 100 shares of Bharat Rasayan, and this is at a price of 10,656 rupees. He's a long-term investor, wants to know whether he should hold or look to sell at the current levels. He's making a profit on this one. Astha, good afternoon, and what's your view here?
Hi, good afternoon, Vinny. Good afternoon to Somil as well and all the viewers out there. So talking about Bharat Rasayan, what is the key point in this company that they have declared today results, and that too in the morning at around 10:30, I suppose. So now I'm today talking about the results only. So we find results to be very good. Why? Because there was a 35% rise in their net sales. I think it has come at around 377 crores. But what was the major feature of the result was the profit after tax, and that has seen a quite a jump of around 25%. Here they have posted some exceptional items. So if I exclude that exceptional item, then my profit after tax is coming at around 25% rise. So this company being into the pesticides, technical grade pesticides they manufacture, and they have posted a very good set of number, a decent set of number, I believe. So on that basis, we are positive on this counter, recommending a hold with a price target of 12,600.
Okay. And good set of numbers that's come in. So you're telling them to hold, keep an eye out on those levels over there. Also, 12,600 is what Astha is saying. Somil, on the technical front also, what is it looking like? Should the viewer continue to hold this one or just book out their profits now?
Good afternoon, everyone. Yeah, I'm absolutely positive in the short term, in the medium term, in the long term, all three of them. So I think in the very short term, 200 daily exponential moving average was retested a couple of trading sessions before, and now it has started forming high tops, high bottom. In the medium term outlook, it has been sustaining a very broad range between 9,000 and 12,000. It's a very broad range, but that is the range for a little while now. And I think this range will break on the upside and it will give a very good rally. So in the medium term outlook as well, I think it is 14,000, 15,000 levels is expected in next coming probably 6 to 9 months. So a good setup at this point of time. Stop loss would be around 10,300 and my targets would be around above 14,000 levels.
Okay, 14,000 levels. Interesting. So, yes, continue to hold the stock because you can still make more profit. That's the word coming in both on the fundamental as well as the technical front. Let's move on to the next query. We have Ajit Menon, who's writing to us from Kerala. He's holding 100 shares of Tata Motors at a price of 947 rupees per share and 50 shares of Tata Tech. This is at a price of 920 rupees per share. So, for Tata Motors, they're making a profit. For Tata Tech, they're making a loss right now. Yes, Tata Motors also, yes, they're making a profit right now. So, Astha, what's your view coming in for this one? Should they continue to hold, sell, average? What's the word for both these Tata stocks? Tata Motors as well as Tata Tech. And given that Tata Tech has not done much in terms of performance, then what would you suggest?
Yes, Tata Tech has not done much because what we have seen that they are continuously facing some macro headwinds. And in fact, if I talk about their management guidance also, so now management has started showing some sort of optimism and they are expecting a strong recovery maybe in the H2 of FY26 on the back of a strong deal pipeline which they are having. So I think on that basis only, because if the management is confident, we should give them some chance. And that's why I am recommending a hold, although I know that this counter has not done very well. And here the cost price is also very high because the cost price of investor is at around 900 rupees. But I think at least we should wait for 3 to 6 months time horizon because H2 FY26 is to be believed by the management to be a better half year for the company. So right now, just wait and watch and hold this counter with the initial price target, which we are expecting for this counter, not more than 700 to 750. Although these are not at the cost price of the viewer, but I think they should wait for at least these levels and again review their query in the same show. Now, talking about Tata Motors is majorly facing problems on the JLR front because of the tariff related uncertainties, because of the demand weakness. So I think, and that's why we continue to believe that this counter will continue to face headwinds regarding the margin also. Now, talking about their India business, in fact, the CV and PV business is not looking very much optimistic for this company as of now. So this is pure a long-term play. So here there is no short-term view. It is just if anyone has a long-term horizon of more than a year, then they should remain invested in this counter for the price target of around 750 at the initial levels.
Okay, 750 at the initial levels for Tata Motors can remain invested there. Tata Tech also, 700 levels max is what you're expecting there, right, Astha? Somil, what's your view for both these stocks, Tata Tech as well as Tata Motors? Should they continue to hold both, add some more? What's the view there?
Tata Motors and Tata Tech, very similar charts because in Tata Motors, if you've seen since September 2024, it has been trading below 200 daily moving average, and maximum time, majority of the time, it has been trading below 20 and 40 daily moving average. Trend is definitely down. Very recently, couple of months back, it has taken resistance at 200 daily exponential moving average and has started making low tops, low bottoms. So Tata Motors definitely, I would say that it has corrected a bit. It has corrected from 1200 levels to 500. So very good retracement has already done, but I would still wait and watch. If it closes above 740, 750, that will be the right time to go ahead and buy the stock for a medium to long term, positions. So wait and watch, revisit again about 200 daily exponential moving average. Now, the next stock is Tata Tech. Tata Tech, I'm not very positive because it's been trading below 200 daily moving average. It has never been gone above 200 daily moving average. Low top, low bottom formation, long term trend, medium term trend, all down. So I'm not expecting too much from this stock, and I'll be expecting new lows to be formed below 600 levels. So, yep, exit would be my strategy on this one.
Okay, exit would be the strategy coming in for Tata Technologies. Tata Motors, you can still hold. Let's move on to the next query then. NSDL, that's the one we have on. Now, this is obviously a new listing that's come in. Now, Sundar is writing to us from New Delhi. He's holding 100 shares of NSDL at 1,402 rupees per share. Wants to know whether he should hold or, right now he's making a loss on this one. But NSDL, Astha, this is the one that has done done well, right? What a performance coming in after listing, right? If someone got it at those listing prices of around 800, today 1,200, it did reach that 1,400 mark as well, right? Viewers bought it at that level. But now it's corrected a bit from that 1,400. What should they do? Continue to hold this?
So the IPO came, I think, in the July end, and it was at an issue price of 800. So we have given a subscribe rating to this IPO with a listing gain and long-term perspective. But we were also very much surprised with the kind of listing premium it has shown, not on the day of the listing, but afterwards it has just shown a strong or a sharp run-up. So now the valuations are looking quite high in this counter, because at the time of the IPO also it was coming at price to earning multiple of around 45 to 46. Although at that time CDSL was running at a price to earning multiple of 60, I suppose. So there was a huge gap between both the counters, because they are working in an oligopolistic market where only two players are there, right? So now my idea here is, because the investor has purchased it at a very high price from 800 to 1400, very, very high price. So wait for some time. Definitely these levels will be shown by the stock in the medium term. But right now maybe some sort of profit booking is going on, because it has shown a strong run up. So idea here is to stay invested in this counter. Definitely it will yield profits, but not in the short term, maybe in the medium term. So time horizon can be set for at least 3 to 6 months.
Okay, that's the word there on the fundamental front. Somil, would you like to add anything? I know there's not much anything in terms of charts, but CDSL is there. So, NSDL, any thoughts there?
See, overall, if you see the sector looks definitely good. Buy on decline should be the strategy. If you see for NSDL, I don't have much charts, but CDSL, let's say CDSL charts definitely looks good. Long-term trend is up, medium-term trend is up. In the very short term, it has taken support at 200 daily moving average. So overall, buy on decline should be the strategy, and I'm very positive on the entire sector here.
Okay, positive on the sector there, CDSL, NSDL, any of them. Just a duopoly there right now. Let's move on to the next query for today. We have Vinesh Gupta, who's writing to us from Jammu, holding 200 shares of Atul Auto, and this is at a price of 450 rupees, wants to know the long-term view for Atul Auto. Astha, your view?
Yes, so long-term view is okay for this counter, not very optimistic, because what we have seen that they have given their results, and the results were, were a okay set of performance, which we have seen on the bottom line as well as top line front. So here Atul Auto is looking to us a very simple and a decent counter with not much of expectation. But yes, one can remain invested in this counter for the price target of 475 to 500 at the initial levels.
Okay, and Atul Auto on the charts and technicals, what is that looking like, Somil?
Atul Auto, overall, if you see the long-term trend is up, but in the very short-term or the medium-term outlook, I think it should go till 390 levels. That's a very crucial level to watch out for, because there is multiple support zone around 390. So I think in the medium-term outlook or in the short-term outlook, it will slide a little below the current prices till 390, 380, and that will be a good price to revisit, or probably buy on decline should be the strategy, because the long term outlook is definitely good.
Okay, that's the view coming in there for Atul Auto. But on that note, we're going to actually slip into a very short break, viewers. But here's a reminder for our viewers: unlock a world of exclusivity, expertise, and influence. Become a member of CNBC TV18 Access. Our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits. Welcome back to Your Stocks on CNBC TV18. We still have with us Astha Jain as of Securities, as well as Somil Mehta of Mirae Asset Sharekhan to answer all your stock-related doubts. Let's move on to the next query then for today. We have Vishal Mohan, who's writing to us from Chandigarh. It's an investment query. Now, he wants to know if he can buy Havells India at the current price for the long term. Astha, what's your view for, Havells, consumer durable side? Are there any other players that you would look at in this space, or Havells is the best bet right now at this price?
So I would recommend not to invest Havells at this point of a time. Let the stock fall more and then take some sort of entry. Now, why? Because we all know results were not that great. Lloyd and ECD, that is Electrical Consumer Durable Division, has not performed well. And the reasons can be, yes, unseasonal rains. And we are seeing that this is the phenomena which we have seen across the industry. But the wires and cable division is doing well. But still, and we have seen a volume growth in that division also. But I think let's give it a chance for at least 2 to 3 months more. Let's see how their Q2 numbers pan out to be, and then make a fresh entry into this counter. So right now, I'm not recommending to enter into this counter at this point of time.
Okay, right now do not enter the counter. The stock was down almost, 19% in the last 12 months as well. Somil, what's your view for Havells as well? Would you also say on the charts and technicals, it's better to wait out maybe till Q2, wait for the Q2 numbers and then decide whether you want to enter the stock?
Absolutely, I agree to Astha. At this point of time, it is trading below the averages, forming low tops, low bottom formation. A huge consolidation has broken on the downside. It does not look that great for me at this point of time. 1380 would be the right level to enter the stock probably, or just revisit again because 1350, 1380 is a very good, very strong support zone. So I would suggest to revisit again around 380 levels. Short term negative, medium term negative, but the long term is definitely good to revisit around 380, 350 levels, 1350, sorry.
1350, 1380 levels is what they could look at and revisit at that time in terms of, whether it merits entering Havells right now. Long-term story surely intact, but wait, maybe there could be some bit of a correction. That's the view coming in, both in the fundamentals and the technical front. Let's move on to the next query for today. We have Sampath Kumar, who's writing to us from Tamil Nadu. He is holding 60 shares of Go Fashions. This is at a price of 791 rupees per share, making a loss on this one. Now wants to know if he should continue to hold or book out his losses. Astha, what's your view coming in for Go Fashions? What is it that the viewer should do? This is on the textile retail side. Is this the best play, and should they continue to hold, and will they recover their losses?
Not a best player, because there was a reason behind it. The same store sales growth was negative this quarter. It was negative 2% against positive 2%. So I think that is the major reason we have not seen a strong stock performing so well, because of the poor results. But now what is catching point about this is they have opened 27 EBO, and in fact their end of season sale has gained quite a traction. So I think that can be the reason. Maybe the next quarter can be a good one, because management is also on the track of opening 120 to 130 stores by FY26. So I think this is a candidate which can be given a chance to hold for at least 3 quarters rather than booking losses at this point of a time. Idea here is to stay invested in this quarter with a price target of somewhere around 740 to 750.
Okay,
and on the technical front also, what are we watching out for, Somil, right now? Does it merit continuing to hold the stock?
No, I don't think so. It's been in the downtrend for a little while, and the 200 daily moving average. Every time it goes to 200 daily moving average, it takes resistance and starts forming low top, low bottom. My suggestion would be to exit the stock. There could be a bounce in the very short term. That would be an opportunity to sell or exit the stock around 750, 730 levels, and then I would be expecting this stock to again make new lows.
Okay, that's a view coming in there on Go Fashion right now. Let's move on to the next query. We have Rajesh Rajan, who's writing to us from Bangalore. He's holding 3,000 shares of Biocon. This is at a price of 380 rupees per share. Wants to know a short-term view, 3-month view for Biocon. He also wants to know if he should continue to hold or book partial profits in this one right now. Right now, actually, he's making a loss. There's no profit as much. It's just slightly below his buy price. So what should he be doing? Astha, Biocon, what are we watching out for? While clearances did come in terms of their facilities, the Malaysia side, the Bangalore facility. But this time, the earnings were not that great. Earnings were not as exciting as one was expecting it to be.
Yes, earnings were not exciting. Management guidance was exciting because I believe we have given the guidance of around double-digit revenue growth in FY26, and that was on the basis of the sustained momentum in the biosimilars as well as their generics margin will are expected to see some sort of increase in H2. So on these basis, management has given the guidance, and I want to believe the management. Then I can recommend only hold for this counter. So right now we believe that this can be a hold category counter, and hence we are recommending hold on this with the price target of 405 at the initial level. So I think definitely this will yield some sort of profit also because the cost price is 380 rupees.
Okay, and Somil, a quick word on Biocon on the charts?
Absolutely positive on the stock. Been positive for a little while now. It has broken a small triangle pattern on the upside. In the very short term, we've seen correction, but I think the next level on the upside would be 400, 410 levels. I agree with Astha. Positive on the stock. Support would be around 350 and 330 levels.
Okay, keep an eye out on those levels over there. Positive views coming in on the fundamental and the technical front for Biocon. But that was the last query for today. So Somil as well as Asa, thank you so much for joining us on the show as always and helping our viewers solve their stock-related queries. Thank you so much for that. And viewers, thank you so much as always for sending us your queries. Remember, you can always email us your queries at the email ID at the top of your screens. But with that, we're going to wind down this edition of Your Stocks. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.